Hello and welcome. This is Dr. Tim Liptrap, and we are back here with our Principles of Finance class, Chapter 2. We're working through a problem set, and this particular problem set is cash flow. Now, we are going to look at the same company as we look through three different sets of cash flows. The first cash flow is the creditors, the second cash flow is the stockholders, and then what we want to do is we want to look at total cash flows and how to calculate that. So we're going to put together a word problem here, and I'm going to show it to you, and we're going to work through the process of solving this word problem. So the company that we're looking at is a company called Boston Ski Shop. It has some long-term debt in 2015 of $4.68 million. In 2014, the year previous, they ended their year at a $3.59 million long-term debt. So they grew their debt. And what they were looking, they probably bought some more inventory or a new building or set up another retail shop or worked on their factory, but they've increased their debt. In 2015, their income statement showed an interest expense of $135,000, which is the interest on that debt. So we're looking at the cash flow, which is the money out to our creditors in that year of 2015. So the way we look at it is we look at cash flow to creditors. We say the interest paid minus any new borrowing. So our interest is paid kind of like you would pay to a credit card company or to a mortgage company for your mortgage on your house or your car payment, that interest that you're paying. We take that number and we subtract from that number the amount of money, the $4.68 million of long-term debt in 15, which is also subtracted from the year previous. So what we did was we took the $135,000 and we subtracted that. We actually came up with a negative $595,000 in our cash flow to our creditors. Okay, so what I'm going to ask you to do is write that number down, because cash flow to creditors is going to be used as we go back here to this title page, is to calculating total cash flows. So that's our creditors. Those are the people that we owe. So this is interest paid, and then you get long-term debt. Now remember, this is not as current assets or current liabilities. This is long-term, things after 1 year. Okay. Now we're going to look at our stockholders. If you remember, stockholders are the people who own the company or actually own shares of the company. When we sell stock in the company, right out of the company, somebody could walk in and say, I'd like to buy 1,000 shares of your company. They could. If it's a private company and we're not selling on the marketplace, they can write that in. And what we would do is we would get money for that, and we put that money into an account called the Additional Paid in Surplus account, or also known as APIS. So in 2014, we had $270,000 in common stock in the stock and $3.5 million in our APIS account. So we sold some stock. Then in 2015, a year later, our balance sheet showed $925,000 in the common stock account and $3.1 million in the same two accounts, in the paid in surplus account. We didn't sell as much stock that year to the outside people. We didn't make as much money. But in 2015, we also paid out $565,000 back to the shareholders, those who own stock, in cash dividends. So the stockholders are receiving some money back from us, and in addition to their stock going up in value, they're getting a dividend and some that cash is received. So the question is, what was the cash flow to the stockholders for that year? Well, the way we do it is we look at our dividends paid minus the net. Notice that net new equity. So net means what we are going to do is subtract something. So we're going to subtract 2014 from 2015. So the common end, which would be 2015, the common stock end, would be $925,000 plus the money in the account, $3.1 million. We're adding those two numbers together, 925, 3.1, and we came up with $4,025,000. We're going to subtract from that the year previous accounts, which was 270 plus 3.5 million, or a total of $3.77 million. As you can see, what we did is I put those in parentheses. So this minus this. Now, order of operations, we do those first. And then we have a dividends paid of $565. So 565,000 minus 255,000 is equal to a positive $310,000 cash flow to stockholders. Let's move on, and we're going to look on how to calculate the total cash flows. Now, the third part of this problem is looking at this total cash flows. So given the information for the Boston Ski Shop, suppose you know that the firm's net capital spending for 2015, the net spending, was $1.25 million. And then the firm reduced its net working capital budget by $45,000. What was the firm's operating cash flow? So we're going to do some subtraction, and here's what we're going to do. We get some cash flows from assets, as you can see right here. So we took the cash flows from assets is equal to cash flows to creditors plus the cash flow to stockholders. So these are the cash flow from our assets. So we took $310,000 positive plus a negative $690, which gave us a cash flow number of a negative $380 from our assets, or things that we own. So we're kind of losing money. Now our cash flow from the assets is equal to minus $380,000, which in turn is equal to operating cash flow minus the change in our budget, our net working capital, minus our net capital actual spending. So what we're going to do is we're going to do this. We've got our operating cash flow. We're going to just run this out. 380 minus, because we just moved the OCF over here, is equal to 380 minus 45,000 plus 1250. Then it's equal to 825,000. Now you may have noticed if you're watching the video that I changed that from a negative to a plus. That was just an algebraic equation. It went from a negative over here to a plus 1250 on the pure algebraic equation. So it was negative 380,000 minus 45,000 plus 1250 gives us an operating cash flow of a positive 825,000. I just want to make sure that you notice that there was a sign change there when we moved the OCF off to the left-hand side of the equal sign. Hope you have a good day.